Guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 168, recorded here on June 1st, 2025. Took a little break last week, so we are back at it this week. Lots of news this week to go over, so this will be a little bit of a long one. We are at block height 899393 Moscow time 9:51. Fees are 1, 1, and 2. And we'll begin with the market news update and outlook. We will get into the weekly Bitcoin news. Like I said, lots to talk about there. We'll check out this week's featured post on the Bitcoin Fortress Substack, do some shout outs, and wrap it up. So, with that, Wall Street on Friday posted its best monthly advance since November 2023. The benchmark S&P 500 index soared 6.2% for May as markets recovered from U.S. President Donald Trump's tariff shock delivered on Liberation Day in April. Final trading session of the month saw a mixed finish after Trump accused China of violating a tariff agreement. Tariffs have continued to garner the spotlight this week after some back and forth over their legality. In terms of economic data, the highlights of the holiday shortened week were an upward revision to the second estimate of U.S. Q1 GDP growth, with an inline reading for the April core Personal Consumption Expenditures Price Index, widely considered the Federal Reserve's preferred inflation gauge. But it's all fake, people, not real. Nvidia also grabbed headlines with another blowout quarterly report, impressing analysts yet again with its stronger than expected numbers and guidance that came despite export controls to China. For the week, the S&P 500 advanced 1.9%, while the tech-heavy Nasdaq Composite climbed 2%. The blue chip Dow added 1.6%. And looking ahead, coming off its best monthly advance since November 2023, Wall Street will now turn its attention to June. Investors have plenty to look forward to next week. In terms of economic data, it will be Jobs Week with updates on private hiring and job openings and Friday's keenly watched non-farm payrolls report. Market participants will also be keen to hear Federal Reserve Chair Jerome Powell, who will be speaking on Monday at a conference in Washington, D.C. In terms of the earnings season, major names scheduled to report include CrowdStrike, Hewlett Packard Enterprise, and Broadcom. All right, jumping into the Bitcoin news, we'll kick it off with the Hodler's Digest for the week May 25th to the 31st. Let's see what's in the top stories. GameStop, the U.S. video game and consumer electronics retailer, has confirmed its first Bitcoin investment, acquiring 4,710 Bitcoin, according to a statement posted May 28th on the company's X account. The company did not specify how much it paid for the Bitcoin or when the purchases were made in the announcement, while its Form 8K filing with the United States Securities and Exchange Commission also offers little detail. The amount purchased was worth around $513 million at the time of writing. The announced acquisition is GameStop's first publicly acknowledged Bitcoin purchase since the company disclosed plans to move into Bitcoin investment in March. A hyperliquid trader known as James Wynn has seen his Bitcoin long bets on the platform liquidated for almost $100 million after Bitcoin dipped below $105,000. Wynn had made two significant long leveraged positions on Bitcoin, betting that the cryptocurrency's price would rise, but on-chain data shows those positions were liquidated to the tune of $99.3 million on May 30th as Bitcoin fell to a 10-day low. The first position of 529.29 Bitcoin worth 55.3 million was liquidated as Bitcoin hit 104,950, and the second position of 421.8 Bitcoin worth 43.9 million was closed after Bitcoin sank to 104,150, according to the hyperliquid analytics platform Hyperscan. On May 29th, another of Wynn's positions of 94 Bitcoin worth 10 million was liquidated at 106,330. Wow. Stay humble. Stack sats. The New York Police Department has reportedly placed two officers on modified duties after the pair was accused of being linked to a local townhouse where a crypto trader was allegedly kidnapped and tortured before escaping. NYPD Detective Roberto Cordero, who serves on New York City Mayor Eric Adams' security detail, is said to have picked up the alleged victim, Michael Valentino Teofrasto Carturan, from the airport and driven him to the townhouse, New York Times reported on May 29th, citing two city officials with knowledge of the matter. Times reported that Cordero and NYPD Detective Raymond J. Lowe, who investigates narcotics cases in Manhattan, also provided security at the Soho townhouse where Carturan claimed he escaped from. Oh boy, can't even trust the police. Elon Musk confirmed that he's quitting as the White House's government cost-cutting czar after admitting it was, quote, an uphill battle trying to slash federal jobs and programs. Well, I could have told him that. Musk's status as a special government employee leading the Department of Government Efficiency meant that by law, he could only serve for a maximum of 130 days, which was set to finish on May 30th. Musk confirmed his exit in a May 29th X post, thanking President Donald Trump for the opportunity to reduce wasteful spending. Reuters reported that a White House official said his offboarding will begin tonight. Musk told the Washington Post for a May 27th report that the federal bureaucracy situation is much worse than he expected, and it was an uphill battle trying to improve things in D.C., to say the least. United States Vice President J.D. Vance took the stage to deliver a keynote address at the Bitcoin 2025 conference in Las Vegas, Nevada, encouraging Bitcoiners to deepen their involvement in politics. Vance highlighted the strategic and geopolitical importance of Bitcoin, emphasizing that the U.S. should maintain leadership in the crypto industry to remain competitive in the age of digital finance. Vance told the audience, what happens in the world of politics, what happens in the world of bureaucracy, will affect even the most transformational and valuable technologies if we do not make the right decisions. The first thing that I would ask you is to take the momentum of your political involvement in 2024 and carry it forward to 2026 and beyond. Let's see, what else do we have here? Bitcoin is prepared for its next major leg up as a long-term indicator triggers for the first time since mid-2024. Analysis uploaded to X by trading account Stock Money Lizards on May 28th described an obvious Bitcoin price breakout signal. Bitcoin is ready to repeat its run to a cycle top like in 2016 and 2020. Stock Money Lizards reported. The optimized trend tracker tool, which offers price trend insights using moving averages and average true data range, is primed for Bitcoin's next blow off top. The pattern is so obvious it hurts, the expos claim, calling OTT the cleanest trend indicator you can use for macro moves. And top FUD of the week, the Thai Securities and Exchange Commission will block 5 cryptocurrency exchanges, including Bybit and OKX, from operating in the country. According to May 29th announcement, Bybit, 1000X, CoinX, OKX, and XT.com will be blocked in the country on June 28th. The SEC said the measure aims to protect investors and crack down on illegal platforms used for money laundering. The SEC advises all investors using these platforms to take necessary action regarding their assets before the shutdown date, the agency said. The U.S. Treasury has sanctioned a Philippines-based technology firm and its alleged administrator, accusing it of providing services to thousands of crypto scam websites. Funal technology is linked to most crypto scam websites reported to the FBI, with victims' losses surpassing $200 million, the Treasury's Office of Foreign Assets Control said on May 29th. Funal purchases IP addresses in bulk from cloud service providers and sells them to scammers, allowing them to host and operate clones of legitimate investment platforms. to deceive victims and steal their crypto, according to OFAC. Uh, this is shitcoin, but it's interesting. Most investors in spot Ether exchange traded funds from asset managers BlackRock and Fidelity Investments are facing significant losses, according to crypto analytics firm Glassnode. The average investor in the BlackRock and Fidelity Ethereum ETFs are now substantially underwater in their position, holding an unrealized loss of approximately 21% on average, Glassnode said in its May 29th report. Ether is currently trading at 2601, according to CoinMarketCap data. However, BlackRock's spot Ether ETF has a cost basis of 3,300, while Fidelity's is higher at 3,500. Well, that's what happens when you shitcoin. And that pretty much wraps up the Hodler's Digest. So moving on, 3 articles for Bitcoin Magazine on the Bitcoin conference, a couple of interesting speakers. Thought we would just jump into that next. So, Jack Mallers announced a new system of Bitcoin backed loans at Strike. The founder and CEO of Strike, Jack Mallers, at the 2025 Bitcoin conference in Las Vegas, announced a new system of Bitcoin backed loans at Strike with one digit interest rate. Jack Mallers began his keynote by pointing at the biggest problem, fiat currency. The best time to go to Whole Foods and buy eggs with your dollars was 1913, said Mallers. Every other time after, you're getting screwed. What's the solution? The solution is Bitcoin, stated Mallers. Bitcoin is the money that we coincide, that nobody can print. You can't print, you can't debase my time and energy, you can't deprive me of owning assets, of getting out of debt, of living sovereignly and protecting my future, my family, my prized possessions. Bitcoin is what we invented to do that. Mallers gave a power message to the audience by explaining that people should hodl every dollar they have in Bitcoin. People should also spend a little of it to have a nice life. You can't hodl forever, said Jack. While talking about loans that people borrow against their Bitcoin, he explained why he thinks banks putting 20% in interest for loans backed with Bitcoin is outrageous. All these professional economists, they are like, Bitcoin is risky and volatile, said Mallers. No, it's not. This is the Mag 7 1 year volatility, and the orange one in the middle is Bitcoin. It's no more risky and volatile. It's a little bit more volatile than Apple, but far less more volatile than Tesla. As Bitcoin matures, its volatility goes down, continued Jack. Bitcoin volatility is at a point where it's no more risky than a Tesla stock. Why should we should not be paying double-digit rates for a loan? Mallers announced his new system of loans at Strike of 9 to 13% in interest rates. It will allow people to get loans from $10,000 to $1 billion. Mahler's closed by saying, please be responsible. This is debt. Debt is like fire, in my opinion. It can heat a civilization, it can warm your home. But if you go too crazy, it can burn your house down. Life is short, said Jack. Take the trip, but with Bitcoin, you just get to take a better one. Let's see. Next is Michael Saylor presents the 21 Ways to Wealth at Bitcoin 2025. And by the way, I'll include links to all the articles I'm reviewing in the show notes. Michael Saylor, executive chairman of strategy, took the stage at Bitcoin 2025, delivering a keynote titled 21 Ways to Wealth. He stated, this speech is for you. I've traveled the world and told countries, institutional investors, and even the disembodied spirits of our children's children why they need Bitcoin. This is for every individual, every family, every small business. It's for everybody. He began with clarity. The first way to wealth is clarity, he said. Clarity comes the moment you realize Bitcoin is capital, perfected capital, programmable capital, incorruptible capital. For Saylor, every thoughtful individual on Earth will ultimately seek such pristine capital as every AI system will prefer it as well. Second path is conviction. Bitcoin, he said, will appreciate faster than every other asset because it's engineered for performance. It's going to grow faster than real estate or collectibles. It is the most efficient store of value in human history. The third way is courage. If you're going to get rich on Bitcoin, you need courage, he warned. Wealth favors those who embrace intelligent monetary risk. Some people will get left behind, others will juggle it, but the bold will feed the fire. Sell your bonds, buy Bitcoin. An extraordinary explosion of value is coming. Fourth comes cooperation. You are more powerful if you have the full support of your family. Your children have time and potential. The secret is transferring capital into their hands. Families that move in unity are unstoppable. The fifth is capability. Master AI, he said. In 2025, everything you can imagine is at your fingertips: wisdom, analysis, creativity. Ask AI, argue with it, use it. You can become a super genius. Don't put your ego first, put your interests first. Your family will thank you. Sailor's sixth way to wealth is composition. Construct legal entities that scale your strategy and protect your assets. Ask the AI and figure it out. You can work hard or you can work smart. This year, everyone should be operating like the most sophisticated millionaire family office. The seventh is citizenship. Choose your economic nexus carefully. Domicile where sovereignty respects your freedom, he said. This isn't just about this year, it's about this century. Eighth is civility. Respect the natural power structures of the world. Respect the force of nature, he explained. If you want to generate wealth in the Bitcoin universe, don't fight unnecessarily. Find common ground. Inflation and distraction are your enemies. Ninth is corporation. A well structured corporation is the most powerful wealth engine on earth. Families are powerful, partnerships are even more powerful, but corporations can scale globally. What is your vehicle? What is your path? The 10th way is focus. Just because you can do a thing doesn't mean you should, he warned. If you invest in Bitcoin, there's a 90% chance it will succeed over 5 years. Don't confuse ambition with accomplishment. Come up with a strategy and stick to it. The 11th is equity. Share your opportunities with investors who will share your risk, he said, pointing to MicroStrategy's own rise from 10 million to a $5 billion market cap by aligning with equity partners who believed in the Bitcoin mission. The 12th is credit. There are people in the world who are afraid of the future. They want small yield certainty. Offer that. Give creditors security in return for capital. Convert their fear into fuel and turn risk into yield by investing in Bitcoin. The 13th is compliance. Create the best company you can within the rules of your market. Learn the rules of the road. If you know them, you can drive faster. You can scale legally and sustainably. The 14th way is capitalization. Velocity compounds wealth, Saylor said. Raise and reinvest capital as fast and as often as you can. The faster your money moves into productive Bitcoin strategies, the more it multiplies. 15th is communication. Speak with candor, act with transparency, and repeat your message often, he urged. Creating wealth with Bitcoin is simple, but only if people understand what you're doing and why you're doing it. 16th is commitment. Don't allow yourself to be distracted, he said. Don't chase your own ideas. Don't feed the trolls. Stay committed to Bitcoin. It is the greatest idea in the world. The world probably doesn't care what you think, but it will care when you win. The 17th way is competence. You're not competing with noise. You're competing with someone who is laser focused, who executes flawlessly, he said. You must deliver consistent, precise, and reliable performance. That's how you win. The 18th is adaptation. Circumstances change. Every structure you trust today will eventually fail. A wise person is prepared to abandon their baggage and adjust plans when needed. Rigidity is ruin. 19th is evolution. Build on your core strengths. You don't need to start over, you need to level up. Leverage what you already do best and expand it through Bitcoin and advanced technologies. I'm going to read that again. That's a good one. 19th is evolution. Build on your core strengths. You don't need to start over, you need to level up. Leverage is what you already do best and expand it through Bitcoin and advanced technologies. 20th is advocacy. Inspire others to walk the Bitcoin path, he said. Become an evangelist for economic freedom. Show others what the revolution really means. Show them the way. Finally, the 21st way is generosity. When you're successful, and you will be successful, spread happiness, share security, deliver hope. That light inside you will shine and others will be drawn to it. As he ended, Saylor smiled and quoted the very origin of it all. It might make sense to get some in case it catches on. A quote by Satoshi. In Michael Saylor's worldview, Bitcoin is not a get rich quick scheme. It's the ultimate long term play. It's the foundation of generational wealth, the engine of personal and institutional freedom, and the tool for those bold enough to lead humanity into a more sovereign, secure future. And then they have the full panel discussion link below. Next, also from Bitcoin Magazine, the debt train has no brakes. Lyn Alden makes the case for Bitcoin at Bitcoin 2025. Always a joy to listen to what she has to say. Nothing stops this train, Lyn Alden initially stated at Bitcoin 2025, walking the audience through a data rich presentation that made one thing clear: the US fiscal system is out of control and Bitcoin is more necessary than ever. Her first chart, sourced from the Federal Reserve's FRED database, displayed a stark decoupling. The unemployment rate is down, yet the fiscal deficit has surged past 7% of GDP. This started around 2017 and went into overdrive during the pandemic and hasn't corrected, Alden said. That's not normal. We're in a new era. She didn't mince words. Nothing stops this train because there are no brakes attached to it anymore. The brakes are heavily impaired. Why should Bitcoiners care? Because, as Alden explained, it matters for asset prices, especially anything scarce. She displayed a gold versus real rates chart that showed gold soaring as real interest rates plunged. 5 years ago, most would have said Bitcoin couldn't thrive in a high rate environment, yet here we are: Bitcoin over 100K, gold at new highs, and banks breaking under pressure. Next came what she called the turning point, a side by side showing how public debt growth overtook private sector debt post 2008, flipping a decades long norm. This is inflationary, persistent, and it means the Fed can't slow things down anymore. Another chart revealed why rising interest rates are now accelerating the deficit. They've lost their brakes. Raising rates just makes the federal interest bill explode faster than it slows bank lending. Alden called it a Ponzi. The system is built on constant growth. Like a shark, it dies if it stops swimming. Her slide showed a relentless rise in total debt versus base money, except for a jolt in 2008 and again after 2020. This isn't going backward ever. So why Bitcoin? Because it's the opposite. Scarce, decentralized, and mathematically capped, Alden concluded there are two reasons nothing stops this train: math and human nature. Bitcoin is the mirror of the system and the best protection from it. All right. And that wraps up a few highlights from the Bitcoin conference. Next up from Bitcoin.com news. This was posted yesterday. IMF alarmed as Pakistan declares bold Bitcoin reserve. Uh-oh. Amid ongoing economic negotiations, Pakistan's unprecedented plan to integrate Bitcoin into its national strategy has sparked concern from the International Monetary Fund, which was not consulted on the initiative. The country declared the establishment of a national Bitcoin reserve and digital asset authority during the Bitcoin Vegas 2025 conference, unveiling plans to allocate 2,000 megawatts to crypto mining and AI data infrastructure. Prime Minister Shehbaz Sharif's advisor, Bilal bin Saqib, emphasized Pakistan's youthful, crypto savvy population and urged international tech firms to invest. However, the IMF has questioned the legality of the electricity allocation and the absence of a formal crypto policy. As talks with the IMF continue, officials anticipate difficult discussions ahead. A little more FUD here from CoinDesk. This was posted on May 31st. JP Morgan's Jamie Dimon says US should stockpile missiles, not Bitcoin. Okay, Mr. Bankster, what do we have to say? JP Morgan CEO Jamie Dimon says the US should prepare for war, not a Bitcoin driven future. Speaking at the Reagan National Defense Forum in California on Friday, the Street reports Dimon dismissed recent government moves to bolster a national digital asset reserve, arguing that real world defense logistics, not blockchain assets, should take priority. We shouldn't be stockpiling bitcoins, Dimon said. We know what we need. It's not a mystery. He called for the prioritization of guns, bullets, tanks, planes, drones, and rare earths. Earlier this year, U.S. President Donald Trump called for the establishment of a Bitcoin reserve and digital assets stockpile. Dimon isn't convinced about it. If there's a war in the South China Sea, we've got missiles for 7 days, he warned. That's not something we should be saying with a straight face. Dimon, a well-known crypto critic, revealed earlier this month that JP Morgan will soon allow clients to buy Bitcoin. Well, he doesn't mind making money off of it, but this, I think, just goes to the core of how the fiat system is the system that enables war and why Bitcoin enables peace. And perhaps that's why he doesn't like it. A little more FUD before we finish off with a couple articles on Bitcoin price, which I don't normally like to go over, but why not? This article is from bitcoinnews.com. This was posted on today. Meta shareholders strongly reject Bitcoin Treasury proposal. Meta Platforms Inc., the parent company of Facebook and Instagram, has voted down a shareholder proposal to add Bitcoin to its treasury. The vote took place at the company's annual shareholder meeting on May 30th, 2025. The proposal, known as Proposal 13, was submitted by investor Ethan Peck on behalf of the National Center for Public Policy Research. It asked Meta to convert a position of its $72 billion in cash, cash equivalents, and marketable securities into Bitcoin. The idea was to hedge against inflation and low returns from traditional bond investments, but the company's shareholders said no. According to the official count, more than 4.98 billion shares were voted against the proposal, while 3.92 million shares were for it, less than 0.1% of total votes. 8.86 million shares were abstentions, and over 204 million were broker non-votes. So now Meta joins Microsoft and Amazon in rejecting calls to add Bitcoin to their balance sheets. Well, I guess they're going to figure it out. FAFO. Proponents of the proposal argued that Bitcoin would help protect Meta's reserves from inflation and weak bond returns. Peck and others pointed to Bitcoin's strong performance in 2024 and growing institutional interest in the scarce digital asset. The proposal said Bitcoin's fixed supply and track record make it a long-term store of value. High-profile supporters, including Matt Cole, CEO of Strive Asset Management, brought the issue to the forefront at the Bitcoin 2025 conference in Las Vegas. Cole addressed Meta CEO Mark Zuckerberg directly. "You have already done step one. You have named your GOAT Bitcoin," he said. "My ask is that you take step two and adopt a bold corporate Bitcoin treasury strategy." Others, like Bloomberg ETF analyst Eric Balchunas, said if Meta added Bitcoin to its balance sheet, it would be a big deal. If Meta or Microsoft adds Bitcoin to the balance sheet, it would be like when Tom Hanks got COVID. Suddenly it feels real, Balchunas said. Despite all the hype and arguments for Bitcoin, the tech giant's board of directors opposed the measure. The board said the company already has a treasury management process in place that prioritizes capital preservation and liquidity. While we are not opining on the merits of cryptocurrency investments compared to other assets, we believe the requested assessment is unnecessary given our existing processes to manage our corporate treasury, Meta's board noted. It's just kind of ironic to me that these big tech companies don't see this. It just, it's puzzling. The board also noted that it reviews many investment options and sees no need for a separate review process specific to Bitcoin. Meta's decision shows the broader hesitation of large cap companies to get into Bitcoin as part of their financial strategy. While companies like Michael Saylor's strategy are adding Bitcoin to their treasury every chance they get, companies like Microsoft, Amazon, and now Meta are taking a more cautious approach. Everybody gets Bitcoin at the price they deserve. According to recent reports, Meta is exploring ways to integrate stablecoins into its platforms to enable global payouts. This would be a re-entry into the digital asset space after the company shelved its Diem project due to regulatory issues, a step that Bitcoin advocates deem unnecessary, insufficient, and irrelevant to protecting the company's finances. Okay, next up is from Cointelegraph.com. This was, let's see, posted yesterday. Bitcoin analysts predict 180,000 to 250,000 price top in 2025, which is most realistic. And honestly, we don't really care because you just stay humble, sack sats, and if the price goes up, it goes up, and if it goes down, you buy more. But let's see what they think. Analysts from Van Eck, Fundstrat, and Standard Chartered forecast a 2025 Bitcoin top between 180 and 250, citing institutional adoption and historical market cycles. Rising global liquidity and record spot Bitcoin ETF inflows have reinforced Bitcoin analysts' most bullish price projections. As Bitcoin continues its bull run and sets new highs, one of the most pressing questions among investors is how high can it really go? Timing a market top is a notoriously tricky task. Mastering the art of buy low, sell high demands both conviction and precision, especially when expectations for a new all time high are mounting. In this phase of the cycle, old and new forecasts offer value. The former help contextualize the big picture, while the latter reflect today's evolving macro and market dynamics. And timing matters. If Bitcoin tops in 2025, should investors cash out entirely in fear of another brutal crypto winter, or will this time be different? The first round of price targets emerged in late 2024 and early 2025 when Bitcoin broke above 90,000. Analysts from Van Eck, Galaxy Digital, and Fundstrat began sharing forecasts in the 180 to 250 range, mainly citing historical price cycles, institutional adoption, and regulatory tailwinds as the primary catalysts. A fresh surge in spot Bitcoin ETF inflows and the growing realization that global liquidity is expanding are new reasons backing Bitcoin price estimates. As BitMEX co founder Arthur Hayes noted, Bitcoin trades solely based on the market expectation for the future supply of fiat, and those expectations are soaring. And then here's a table with a bunch of analyst predictions in it. Interestingly, many of the predictions made at the end of 2024 remain unchanged in May 2025. That's because the core assumptions, rising institutional demand, and pro crypto regulatory signals have largely played out as expected. Newer macro developments have only reinforced the case. Liquidity has become the buzzword among analysts as it becomes increasingly clear that Treasury yields remain stubbornly high and a debt crisis is approaching. As the Bitcoin Layer author Nick Bhatia noted, Bitcoin rose with yields in 2021 on growth, stimulus, and reflation. It's rising with yields again in 2025, but this time the context is different. It's not optimism driving this move, it's a search for neutrality. Most analysts agree that Bitcoin is firmly in a bull market. On-chain analyst Willy Woo recently pointed to the risk signal trending downward, suggesting buy-side liquidity continues to dominate the broader environment. The last time this occurred, between 2023 and 2024, Bitcoin gained over 200%. We are setting up for another solid run on the long time frame, Wu wrote. However, many Bitcoin market cycle based models anticipate a sharp correction in 2026, possibly leading to a full blown crypto winter. Still, even that logic is being questioned. Bitcoin is global macro this cycle, Wu warned. Don't necessarily bet on nicely manicured 4 year cycles. Bitcoin is transitioning. Internal forces, the halving is getting weak, and global liquidity powers Bitcoin. Hence, Bitcoin is becoming the canary in the coal mine for global macro moves. From a macro lens, the setup looks more fragile than ever, indeed. As crypto analyst Stack Hodler noted, the Trump administration's attempt to lower 10-year yields using tariffs and spending cuts to signal fiscal discipline has fallen short. Now the U.S. deficit is set to rise. History is repeating mounting debt, currency devaluation, and a global financial reset. As the analysts put it, there's still 7 trillion sitting in money market funds. All of that will eventually rush into something that can't be printed. And as the only credibly financed store value asset which has consistently outperformed, Bitcoin will ultimately be the biggest winner. That capital, once unleashed, could fuel a much larger move than most 2025 projections currently anticipate. Joe Burnett of Unchained even posits a coming sovereign race to accumulate Bitcoin, possibly driving its price to 1 million by 2030. Kathy Wood's ARK Invest sees a wide band of potential between 500,000 and 2.4 million. These numbers may seem extreme, but in a world where US debt spiral shows no signs of slowing and where fiat stability is increasingly questioned, they are no longer easy to dismiss. As the case for Bitcoin continues to strengthen, the market may only be beginning to price in the role in the coming financial realignment. And next from Decrypt, this was also posted today. Money printing will lift Bitcoin to 250K this year, according to Arthur Hayes. So let's see what he has to say about the price. Bitcoin's price will more than double within the next 6 months, swelling to 250. I love all these predictions, by the way. It's like, who the hell knows? According to Bitcoin billionaire and BitMEX co-founder Arthur Hayes, as U.S. President Donald Trump moves away from the market rattling impact of tariffs toward other fiscal policies. Midterm elections are coming up in the U.S., he told Decrypt at Bitcoin 2025 in Las Vegas. While the Trump administration went hard on tariffs and was taking this market pain for the last 3 months, that narrative has to shift. Instead of pursuing trade policies that could weigh on economic growth and potentially hurt Americans' ability to afford everyday goods, Hayes, who has made his fair share of bold predictions, argued that the president will have to show he brought goodies for the population to help Republicans at the ballot box come 2026. They're going to accelerate the money printing, Hayes said, referring to the Federal Reserve, an independent government agency that is primarily responsible for managing the U.S. money supply. Among policies that U.S. Treasury Secretary Scott Bessent has teased as fiscal stimulus, Hayes highlighted potential changes to Fannie Mae and Freddie Mac, government-backed mortgage giants that have been under government oversight since the 2008 financial crisis. If the government-sponsored enterprises are allowed to go public and raise capital again, that would inject cheap liquidity into the housing market, Hayes said, allowing them to lever up the balance sheets. Would also make mortgages more affordable, he said. Among knock-on effects, increased housing activity could theoretically spur economic growth and support risk-on assets. On top of that, discussions surrounding a so-called supplemental leverage ratio, or SLR exemption for U.S. Treasuries are bullish, Hayes said. In essence, the White House wants to ease leverage ratios for banks when it comes to their exposure to U.S. debt. That allows the U.S. banking system to apply infinite leverage to buy Treasury bonds, is obviously very positive for global capital markets, he added. Finally, Hayes sees the government shifting from tariffs to capital controls to support American manufacturing in a more politically palatable way. Instead of taxing imports, the U.S. could tax foreign government holdings of bonds, equities, and land that stem from long-running trade imbalances. How that could drive governments toward gold and Bitcoin is a central theme of his latest essay, which also predicts that Bitcoin will hit $1 million before 2028. Earlier this month, Hayes predicted that Bitcoin could hit $150,000 this year as opposed to $250,000. Billionaire investor Tim Draper made a similar call this month, highlighting regulatory tailwinds for the asset under the Trump administration. Bitcoin's path to $250,000 this year will also be bolstered by myriad firms adopting Bitcoin as a Treasury Reserve asset, he said. With Congress weighing legislative initiatives that could potentially establish rules for stablecoins and create a regulatory taxonomy for many coins, Hayes also told Decrypt that Ethereum will make its own comeback this year, rising as high as $5,000. Okay, well, that's the only thing I don't like about Arthur Hayes is he's got a little shitcoin problem. All right, finally, we have Crypto Potato. This was posted on May 30th. Uh, Articles entitled SEC Drops Lawsuit Against Binance in Landmark Decision. The United States Securities and Exchange Commission has officially dismissed its lawsuit against crypto exchange Binance. This puts an end to one of the most high profile enforcement actions in the crypto space. Huge win for crypto today. The SEC's case against us is dismissed, Binance revealed in a May 30th X post. The company also thanked SEC Chairman Paul Akins and President Trump's team for pushing back against regulation by enforcement, adding, U.S. innovation is back on track, and it's just the beginning. The dismissal follows a joint motion filed on May 29th by the SEC, Binance, and ex-CEO Changpeng Zhao. The petition, submitted to a federal court in Washington, D.C., requested that the agency's original complaint be dropped. The regulator stated that dropping the case was appropriate in the exercise of its discretion and as a policy matter, and clarified that the decision does not reflect its views on other cryptocurrency related litigation. The lawsuit was also dissolved with prejudice, meaning it cannot be reopened. This ruling comes after the lawsuit was paused twice earlier this year, in February and April. The SEC's crypto task force, created under acting chair Mark Ueda, played a key role in the decision to move forward with the action. The financial watchdog first sued Binance, Zhao, and its US based arm in June 2023. The lawsuit accused them of violating securities laws by offering unregistered securities to US investors, mishandling customer funds, and misleading investors. The agency also claimed the exchange had failed to put in place proper financial controls. It was the last major regulator still pursuing Binance after a $4.3 billion settlement with the US government last year, in which Zhao pleaded guilty and stepped down as CEO. The SEC has been reversing its approach to crypto regulation under President Donald Trump's second administration. The development is the latest in a string of enforcement actions that the agency has since dropped. In earlier months, it abandoned or settled complaints against Coinbase, Ripple, and Kraken. Additionally, the agency closed its investigations into Robinhood Crypto, Uniswap Labs, and OpenSea. Paul Akins has since taken over as SEC chairman, bringing a pro-crypto stance and a commitment to create a framework for digital assets. Under his and Ueda's leadership, the regulator has held several roundtables focused on crypto regulation and financial innovation, with Commissioner Hester Pierce playing a key role in these discussions. All right, moving along, I wanted to highlight this week's featured post in the Bitcoin Fortress Substack. Articles entitled From Treasury to Titan, the Rise and Future of Bitcoin Treasury Companies. And also a brief look ahead at upcoming articles on the Bitcoin Fortress Substack. I did do a quick article on the Bitcoin 2025 in Las Vegas, which will be coming out Monday. Some different things than what I discussed here in terms of highlights of the conference. After that, it's Thank God for Bitcoin, followed by Bitcoin is Hope. Finding peace and purpose in a crazy peak fiat world, the beginning of knowledge, Proverbs 1:7 and Bitcoin, and then stay humble, stack sats. So lots of cool stuff coming up on the Bitcoin Fortress Substack. Also wanted to shout out to God's Death for their support, 237 sats on the last episode. Thank you, sir. And with that, I will thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can also follow my Substack at bitcoinfortress.substack.com. And you can follow me on Nostr. My NPub is in the show notes, along with all the articles I went over this week. And with that, I will talk to y'all next week. Bye bye.